I'm going to go ahead and just introduce, I'm going to hand things off to Amy Bach and Lisa Hughes from United Policyholders to share more about what they do and some considerations for ongoing insurance topics in this community. And there will be time for questions and answers afterward. As you guys know, earlier this year, FACO tried to provide some guidance because I was getting so much questions. What are we supposed to do about this volatile insurance climate that we're in right now? So we try to provide some guidance. A lot of that guidance was using these great resources from United Policyholders, and I appreciate the leadership that they've been bringing to the Fire Adapted Colorado network throughout the summer as I've got to know them. So thank you guys so much for being here in this really important topic, and whenever you're ready, we're ready for you.
Great, thanks. Lisa, did you want to offer anything, or should I just jump right in?
You can just jump right in. I think I met a bunch of you at the conference. I'm Lisa. I'm the Colorado United Policyholders person. We're based in California. So if you have direct, did I just freeze? Sorry. Direct Colorado questions, you can reach out to me. So.
Okay, so thank you, Laura, and everybody participating in this effort. It's it's heartening, it's encouraging, it's all very positive in terms of all the work that all of you are doing to raise awareness of the imperative of reducing wildfire risk, not just because we know more about the risk and we want to save homes and communities, but also because we are in the grip of a growing national insurance availability and affordability crisis. And one of the most viable strategies for trying to help people get through this crisis is to do everything we can to reduce risk and to model for each other innovative approaches, and then also to get enough data on completed mitigations at the parcel and the community level to be able to really convince insurers that that they should come back into a lot of the areas they've been pulling out of. So a little bit about UP. We've been serving Colorado since the 2010 Four Mile Fire. We have built a lot of relationships in the state of Colorado. We have there's been, since we were collaborating with your state, there have been a series of different insurance commissioners, and each one of them, I have made sure that we had a good relationship with, as good as we could, so that we would be able to bring as much resources to wildfire impacted households and communities as possible. That's always been our primary goal. We've been around for 3 decades. And thank you, Laura, for acknowledging all the free information that we do offer on our website. So for many, many years, our focus was helping people certainly get back on their feet after disasters and collect every dime of insurance. And then also after your one-off house fire, make sure that we would raise people's understanding so that they would be able to really be good consumers and collect all the benefits they'd paid for. A lot of our work was focusing on helping people who were underinsured, and so through our Roadmap to Preparedness program, we've done a lot of work to try to help people understand that it's not, insurance isn't just insurance. Like if you have insurance, you have insurance. It doesn't mean you have the right amount or enough. And so where we were working very hard on that front, we've had to pivot. And so our in California, I know this type is a little small. Our market and where we're based, we're national, but we are based in California. That's where a lot of us live, although we have 2 staff people who live in Colorado, Lisa Hughes and Amy Ludwig. And then we have quite a good number of volunteers in the state of Colorado. So because we've been doing wildfire recovery work there, we knew that your market was starting to get a little funky as early as the Black Forest fire. We knew that people were starting to get non-renewed. And actually, it was our organization that really put a lot of pressure through the media and also directly on the Colorado Division of Insurance under a previous administration to really pay more attention to who was getting dropped where, what counties where it was getting difficult for people to hold on to their property insurance. So we have been watching, monitoring, both in our state, but really yours and all over the country. And the two states that are having the biggest challenges, as I'm sure you all know, with property insurance are our state and Colorado. So California, Colorado. Washington, Oregon also having their problems, New Mexico, Arizona. I mean, basically, there isn't a state now in the United States where you won't have people saying, I'm getting dropped and I don't know what to do. And there's just not as much competition. So a combination of factors have created this, right? And you all know this. Home insurance has become much harder to find. It was started in WUI areas, wildland urban interface areas, but that now it's hitting everywhere, suburban and urban. And so what we originally thought was a crisis linked to climate change turns out to be just as much, if not more, driven by technology. And I'm going to explain that in a minute. So in a lot of parts of your state, people have been really scrambling. They've got non-renewed, and then when they're shopping, the market is just not what they're used to. We're all used to it being a buyer's market where there's insurance companies lining up, competing and advertising for our business. That's not happening right now. So a lot of people are really in between a rock and a hard place, and they're finding that their only option is to buy through a company they've never heard of, these surplus lines companies. And of course, everybody is kind of waiting for your FAIR plan to come into being, and that's projected to be in the new year in 2026. So the woman who's going to be in charge of the FAIR plan is somebody that I know because she has been on the insurer side. And when we were getting legislation through the Colorado legislature a couple of years in a row, she was the point person negotiating for insurance companies. So she really understands the universe from an insurance company's perspective. And I have to say, though, as an insurance company advocate, I have found her to be very reasonable and very well grounded. So while there's going to be a lot of anger and frustration with that the FAIR plan doesn't do this and doesn't do that, doesn't sell enough, it's, I kind of ask everybody to try to be as positive as you can about that these are all experiments. So we are, the word that everybody is using these days to describe what's happening is unprecedented. So we want to all give each other as much grace as we can and hope that we're going to find solutions together. So a lot of my organization's guidance has gone from trying to help people avoid being underinsured, telling them to buy code upgrade coverage, buy extended replacement coverage, buy sewer and drain backup, increase the amount of money insurance on your dwelling. That's not viable for a lot of households now because the prices are so high. So we're all making trade-offs. We're trying to figure this out. So if I don't have full insurance, I have less than full insurance, what's my best options for protecting my assets, all right? So one of the things that my organization did that I launched personally because I thought I could see what was coming, I could see the writing on the wall, was something that sounds like very similar to what y'all are doing right here, which is you're coordinating. So I'll tell you in a minute about how we set about it. Feels like FACO and this RAP working group that I launched are very, very similar actually in the way that you're approaching this challenge, which is to try to get all hands on deck from different parts of the state rowing in the same direction to reduce wildfire risk. But what is causing this crisis? Risk segmentation and what I call TMI, too much information, facilitated by technology. We're talking about not just the drone images that insurers now have, but we're talking about AI. Insurers are now accessing databases from public entities like permit offices and all kinds of publicly available data that is giving them, so with the drone images, the data, the models, and the advent of risk scoring systems. So just like you have a credit score, right? Now your home has a risk score. And those are all relatively new phenomena. All this tech and the whole package is causing insurers to go, whoa, wait a second. I don't want to insure this house. This looks too risky. What, look at those propane tanks. Look at that wood. Look at that trampoline. Look at that pool or whatever, right? Look at the condition of the roof, right? So we're having a big reaction. Insurers are reacting big to this new information, and we need to rebalance the system, right? We also have climate change, right? We all know it. Increasingly severe weather events. And then we have these other factors like inflation and a hard reinsurance market. That's the insurance that insurers buy, meaning expensive. Hard means expensive, not a lot of negotiation that can be done to bring prices down. And then, of course, you have a big push by insurance companies for deregulation and saying that politicians don't let us charge the rate that we need to charge in this new era. So how is my organization helping? We are monitoring the marketplace. We are partnering with Commissioner Conway and his team. We are dialoguing with insurers, and we are educating consumers on how to reduce risk, navigate the crisis, and keep their assets protected. We are coordinating with firefighting agencies, very much like what you guys are doing there. Community-based risk reduction advocates, the Institute for Home and Business Safety, scientists, insurers to advance risk reduction standards, home hardening, defensible space, funding, and programs aimed at increasing individual and community level mitigation. We are, just like FACO is doing, we are facilitating innovation and collaboration by sharing ideas. Oh, we floated a bond measure over here. Really? How did you qualify it? How did you get it on the ballot? How did you pay for it? What happened? How did you, message around it? That kind of thing. You've got a matching grant program if you're an affluent county. How's that working? You don't have you don't have households that can pony up even a good chunk of it. How are we going to implement needs-based assessments to decide who gets a grant and who doesn't, right? All those really hard decisions that I'm sure y'all are talking about all the time. We're doing that through United Policyholders RAP working group in California. And the whole time we are dialoguing with insurers to try to get them to calm down a little bit about all this data that's coming their way, and reminding them that they've been insuring these homes for many, many years. So and yes, things have changed, but not that much, right? Okay. And supporting federal and state legislation to increase mitigation incentives and funding. There's our RAP group started because a lot of people were getting dropped, and they would be calling their fire agency and saying, hey, could you come out and could you do an inspection, tell me what to do, and give me a letter that I can use with my insurance company. And in the beginning, before this crisis really, really hit crisis levels, that letter from your local fire agency was working to get an insurance company to say, okay, we won't drop you, we will offer you a renewal policy. It stopped working, and then we kind of amped up our work. And the first thing that we did, and you guys may know this already, so I'm just going to try to blow through it, but because we're probably in very similar places in Colorado and California in terms of need more money, need more hands on deck, need more rewards to incentivize people on the insurance side, right? We ended up with two sets of standards in California. I'm not tripping on it. So it is what it is. We have the IBHS Wildfire Prepared Home Standard. We have the Safer from Wildfires. Those are two sets, almost identical. The Safer from Wildfires is a little more humane in the sense that IBHS is saying you've got to do everything or you don't deserve a discount and you don't deserve a renewal. We're not certifying you. And I understand why they're doing that. The science that, that's the science, right? It's like they don't want to open the possibility that you could screen your vents, replace your roof, have 6 inches before your siding, and not do double pane windows, let's say, and still qualify for the discount. They want to have it be very tight. right? That's IBHS. They are funded by insurers. They want to be or on the side of caution. Safer from Wildfires was developed by a consortium of government agencies. So it was the Department of Insurance, the Department of Forestry, the Department of Housing. And so again, very similar lists, but the two different approaches are you've got to do all the things on the list for IBHS. They have two levels, base and plus, and you don't get a reward. Safer from Wildfires contemplates that you get a reward for doing anything, right? That each of the steps gets a little incremental discount. Okay, so this is just this is a rack card that UP puts out, and it looks just like what you guys are putting out, right? It's Class A roof, install screens, keep your gutters clean, 5 feet of defensible space, home ignition zone, all that stuff, right? Removing combustible materials from under the deck. Wood fencing is something that's been getting a lot of attention lately, that you should not have it, but that's a work in progress, right? So very, very similar, almost identical, okay? Wildfire prepared home, again, base is same kind of list, almost exactly, and then the plus you get into enclosing the eaves and moving out buildings to at least 30 feet away, but everybody's talking about the same thing. And there's some, are they going to come to Colorado? Really, I want to, I know we have limited time, so I'm just going to try to zoom through. You've got some programs, we're going to talk about that. Do I think that you desperately need, it would be great for IBHS to come in, and I know that they will. But you have the original program, you have Wildfire Partners, you have what you're doing through FACO, you have here and there different programs, you have the Wildfire Resilience Assistance Program, which I guess is also called WRAP. And then these are some of the resources for home hardening and home assessment. So what I want to say is it'd be great, of course, to have IBHS there with their program because it's another kind of concrete, organized program. But they're just one entity, and I think what we really need is lots of different channels, but one consistent set of standards, right? When I talk about channels, I'm talking about channels for inspectors that know what they're doing, channels for communicating completed mitigations to insurers, or more importantly, channels for making sure that the mitigations get done right, that the homeowner knows what they should do and all that. And all those channels, I don't think it's realistic to think that IBHS can handle all of that. So I do think what you're doing is makes a lot of sense. It's like, you have the building blocks across the state. You do as much as you can, and in as coordinated a fashion as you can, right? These are some of the home assessment resources. Again, thank you, Lisa Hughes, for pulling these together. I know I'm preaching to the choir here. We looked at Wildfire Partners a lot when we were starting our WRAP working group in California, mostly because it's the one program that we knew of, and still, that if you graduate and you complete, right, they've got these, at the time I last checked, it was like 8 insurers, I don't know what it is now, partners that would say, okay, you're a graduate, we will renew you, right? And we were like, hey, we'll take it, that's great. So every little bit of positivity is good. And I know that they would love to serve the whole state, but it's not it's cost prohibitive. And so we're all just continuing to learn from each other, right? Risk scores are a big deal. I think you all know that by now. Hopefully in the new year, you'll get a legislative proposal introduced and make it through your legislature that gives the homeowner information about their risk score. What is it and what can I do to fix it? And if I have a crappy risk score, is it because a drone thought that my roof was damaged when in fact it was actually a solar panel or something like that? So we're trying to give people the tools to be able to get the best risk score that they can, because those risk scores have a huge impact on whether an insurer offers you a policy or not and what they charge, right? Just a few rules in your state, not a lot, about insurers' obligation to offer you a renewal policy. Very, very little. They're mostly have the freedom to decide who they're going to insure. It's the same thing in California, who they are going to take and not take. They do need to be consistent. They're not allowed to non-renew you just because of a wildfire. There has to be some other reasons. Okay. I mean, the past wildfire. So yeah, we're hoping that you will get this rule, and that they have to tell you more about your risk score. Insurers get to use models in Colorado, and I know the commissioner is very, very intent on making sure that those models fully reflect risk reduction activities that have been done in those communities, and that is a big work in progress. Opportunities and challenges, I'm going to wrap up in a minute here. Um, on the opportunities side, we've got the BRIC funds, LISTOS, we've got the CEDARS program, we've got all the one-off grants and gravel grants and defensible space and chipper and controlled burns and shaded fuel breaks and all the good work that people are doing, the matching grants, bond measures, a lot of the work that all of you are doing to build those channels to convey completed mitigations to insurers. We've got various proposals pending in DC for federal tax exemptions and deductions for both grants received and expenditures. I'm not up to speed on whether Colorado gives you a break on your state tax for money you spend on mitigation. And then in the new year, we'll see how things go next month and whether we will see something like the Insure Act that would create a new national disaster insurance program that has a big mitigation component to it. Lots of things pending in DC to increase mitigation funding. Challenges, obviously, it's expensive to do the work, and it's just not something a lot of households can afford. Same, local governments don't have the kind of money to really support grants as they'd like to. Insurers are still very resistant to mandated discounts, or any kind of being told who they have to sell to and not. There's a gold rush of untested mitigation vendors, so that's a little challenging. Lots of debates over whether gels and sprays and foams work and all that. Water, sprinklers, all that. Clearing vegetation on absentee owners' properties, that's been a bit of an issue. Skepticism, why should if I spend this money and time and I'm still going to get dropped by my insurance company, what's the point? And that when we started a lot of this work in California, the insurers were very much emphasizing parcel level. We want to see people reduce risk to at the parcel level, but now that more and more of that is happening, we're hearing more, no, we want to see a critical mass in the community. We need to see, and so the IBHS is actually scrambling right now to build their neighborhood, the sort of corollary to the wildfire prepared home will be the wildfire prepared neighborhood. So they're working on developing the standards. So I'm still saying this, yes, it's still worth it to buy insurance, but I am getting an increasing flow of people saying to me, well, if I own my house outright and I don't have a mortgage company forcing me, I just don't know if it's worth it. And I just have to remind folks who haven't been through a total loss, that that's the max that you can get from FEMA as an individual. It's $42K. There's some housing assistance now, but SBA loans have to be paid back. So there really is no substitute for private insurance in terms of the dollars that you need to put a house back from the ground up. So here's our affordability strategies. Find out what discounts are available, ask for those you qualify for, bundle, find a really good agent or broker, raise your deductible, don't file small claims, reduce or eliminate buckets of coverage you can live without, and mitigate, right? Those are And then I'm not going to go through all this because we're out of time, but this is just some information. Laura has the deck. You're welcome to share it. We are going to, about the different kinds of insurance companies that are out there. Um, and then we have a survey that I would love all of you to complete. So this is one way we are keeping tabs on what's going on in Colorado with insurance, home insurance, affordability and availability. And then this Thursday, you're welcome to come back on 7 p.m. Mountain. I'll be hosting a panel discussion. I will have somebody from the Colorado Division of Insurance, and hopefully one or two agents. And we'll be walking you through in a little more detail what strategies we recommend for if you get non-renewed, what do you do? Or if you are shopping for a new policy and you're having a hard time, what do you do? So with that, I'm going to stop sharing and end my little marathon presentation. And if we have time for questions, I would love to answer them.
Yeah,
There were a couple in the chat, or go ahead, Laura.
and yeah, I'll just add, we definitely have time for questions. I know it's a really important part of this. I'll also say when we move to breakout rooms, I will try to do that at some point. We will have a room where we have United policyholders in it, so that if we don't get to every single question, or if one of those slides you were like, hey, I was kind of wanting to deep dive and learn more about how insurance works, like there'll be an extra space for them on today's call. It was also mentioned that deck will be shared. I'll put that in with all our network call files. And if you're not sure where that's located, an email to me will get you there. It's in our, like when you go to the website resources and put in the password, if you're familiar with that. But yes, let's get into some questions. Lisa, do you want to field the ones that started in our chat, and then we'll go from there?
Yeah, I think if I missed them, let me know, but I think there was the couple that I caught where someone asked, how much success has IBH's Wildfire Prepared Home program had in securing insurance based on completion of the program?
So that's a great question. They had a really rough start. Their numbers were really low when they launched, and it's all because of the 5 feet. That's the main thing. 5 feet and expense, right? Resistance to the 5 feet. But they're up well above 1,000 completed. And I would say from the clearest example I've seen of of an IBHS wildfire prepared home certificate meaning something, getting you helping you is one insurer, CSAA, which doesn't operate in Colorado to my knowledge. They started by saying, if the household gets the base level, that's great. But in order for us to renew them or offer them a new policy, they need to hit the plus. They changed that, which we were very grateful for, and went down to, as long as you meet the base, we will renew you. So we saw one insurer, and we are hearing anecdotally that it is helping people, but definitely it's a challenge because of the strict enforcement that there be nothing in the 5 feet, which is still very controversial.
And then I already answered it, but someone asked us a question if we're able to do stuff for public meetings. And the answer to that is yes. There's pretty much me doing it in Colorado, so feel free to reach out to me. Some of it is dependent on funding, but we can always send handouts or do Zoom. And then Laura wanted to know if we can speak to our plans for increasing where we can engage in Colorado. Do you want me to answer that, Amy, or do you want to answer that?
No, I'll answer it.
Okay.
We have a grant in California from the Governor's Office of Emergency Services, and it allowed us to say yes to every single invitation that we get, and that's a lot. We have done over 100 already this year, community programs all over the state. Plus, we host a statewide, we have a website, a RAP resource center. And for each county, you can go in, I can show you actually. It'll just take me 1 second here. Hang on, let me go here. Okay. So you can click on your county and you can find out, hang on. Okay, there. And you'll find out um, who who's offering grants, where, how do I apply for them, blah, blah, blah. So we got that grant and it was a change for us. We currently have funding in Colorado to do what we're doing here. So we would love to do more, but we have to find that funding. And we really ask that people not use our stuff without attribution. It's really hard for us because we are, we are trying to be, so if you do want to use our materials, you're welcome to, but please make sure that you give us attribution and you don't just cut and paste them and put your name on it, whatever, right? I appreciate that. So the answer is we want to do more. One of the things that we've done in California that we're doing, that Lisa's doing a lot more of now, is building these relationships with a handful of agents that are not drowning their sorrows in the nearest tavern or taking early retirement, which a lot of them are, because it's so hard right now for agents to, they're really between a rock and a hard place. So we want to do more. And now you guys are on my radar. And Lisa said, I think FACO and RAP are very similar. And I now know, having sat through your introductions, Laura, very similar, very, like grassroots, right? So if you want to try to work with us to get a grant to do a RAP resource center for Colorado, shoot, we're all over that. We've got the tech, we built the tech, and we can do it. We just need the money.
Yeah, that's about what I understood is like, it's going to be funding based. That's why you're based in the areas you currently are in Colorado. So we all as a community can look out for those opportunities. And then, yeah, Becca's here. She's listening. So planting seeds.
Yeah.
That was all the chat questions.
Okay. Yeah, I mean, we had a great thing. Again, I'm praising CSAA because they came on, like I tried to get the insurers to come on our calls CSAA came on and Mercury came on. They're another California carrier. And people, like every little bit of kind of reaching the right person with this energy, like we were bringing this incredible energy, right, Lara? You've got everybody, in your group has got this positive, like can do, scrappy, right? And I think that's a lot of what is driving all this, because I certainly get where insurers are coming from. They're very they're very, very nervous, and so are we.
Go ahead, Steve.
Yeah, my question was more about the neighborhood scale or community scale, which you kind of alluded to, that IBHS is looking at that. But when you're having, I think we all are wondering, of course, how do we show meaningful risk reduction activity at a larger scale, just in the individual parcel? But it's particularly in our closely spaced, dense suburban environment. Besides what IBHS is looking at, are you having, what are the other aspects of the conversations that you're having about risk reduction beyond the individual parcel level?
That's a great question. I think, by the way, one of the sayings that I think I've had to repeat at like so many of our meetings is, let's not let the perfect be the enemy of the good, right? Because there's so many challenges here, right? With, reluctance and, just disputes over methodology of like what's effective. So, I think that a lot of the focus in California recently has been on things like community, like fire breaks, shaded fuel breaks rather, and controlled burns, like that are a little more controversial, I guess, or challenging, but they are very significant. So I think a lot of the talk has been around the models, because insurers are relying so heavily now on models, and trying to get that data into the models. And I gotta say, Steve, we're just so at the ground. It feels like we're a little bit at the ground floor. I mean, there's this WUI data commons effort that's sort of going in California, but for each of these attempts, there's going to be like a counter force, right? So, you want to, we data commons, people get very nervous about, the insurer knowing what their official government, jurisdiction is rated at. It's like you can't hide from your rating anymore, right? It's just that there's a lot of different ratings. So I don't know if that answers your question. I think it's just an ongoing effort to get some of the, look, everybody agrees that the parcel level, it's very concrete, right? Do this, this, and this. The community-wide, I don't know that we've got standard, and I think that's what IBHS is trying to do. If you have empty lots, how does that work? If you have, I'm so sorry if my internet connection is bad. Is it bad? Am I coming in and out? So.
We can hear you. It's a little of an adventure, but we can mostly follow.
Okay, sorry. Yeah, it's just, we're all still on the cutting edge here, right? We're kind of building this as we're flying it a little bit.
Yeah, no, it's great. I appreciate it. Thanks.
Probably have time for one more question if someone's burning. Okay, awesome. So I would ask Amy and Lisa, we're gonna move into breakout rooms here, but it'll be like join breakout room, just ignore it. You stay here. And that way, if anybody from the network wants to continue engaging with you, they know where to find you.
Okay.
And everyone else will start moving to our breakout rooms so that we can not just listen to the presenters today, but actually know who makes up this network and some really great things that are going on locally. So Julie, whenever you're